Hello, everybody, and thank you for joining us for today's episode of Trade the Chain. It is July 28th. We're almost halfway through summer, gentlemen. That is crazy. Thanks for joining us. As usual, we have Doug, the Everyday Guy, DeRosa, and Trade the Chain's Director of Research, Nick Mancini. We also have somebody else who's having connection issues, so we're going to forget about him for now until he gets his act together. But today should be a short show. Crypto only goes up and there's no real recession. So that's it, folks.
Thanks, White House. Thanks, Biden.
We'll see you tomorrow at the same time. No, in all seriousness, we're gonna break it down whether people are calling it a fallacy or not. But first, let's go over the Trade the Chain dashboards. We are obviously, unless you're sleeping all day, crypto has been going up. So we are now at $1.1 trillion market cap, up 8.5% in the last 24 hours. Bitcoin just shy of 24,000, but did breach the 24,000 mark a short time ago. Daily sentiment obviously risen a little as well into bullish territory, 62 out of 100. The overall crypto market still slightly neutral with 52 out of 100. And then on the hottest on the social there, Ethereum Classic leading the way. I have no explanation for it. Up 40%, as high as 45% just minutes ago, with a 434% increase in activity. But to see Ethereum Classic up 40+% on the day is crazy. Then you have XRP getting a lot of social action, up just under 8%, as well as YFI, Yearn Finance, up 34.5% in the last 24 hours, sitting at $9,294. I remember just 3 weeks ago, that thing's sitting at $4,200 and going, wonder if I should buy it. Well, I guess I should have. On the top gainers, again, we have ETC, but we also have Cell going up. Right now sitting 39, just under 40% for the previous 24 hours, shooting as high as, Doug, what did you hit the high price at earlier?
I think it was about 8 cents higher from here, wasn't it?
Yeah, it's crazy. So obviously there's some Twitter action calling for a short squeeze. You know how that goes, a little hashtag trend. But really sentiment, it's kind of indifferent. The most bullish coins, as you can see at the bottom here, for daily sentiment, we got XRP at 94 points. Although we've got Glimmer, GLM, Moonbeam's coin sitting there at 87. And then on the bearish ones, we do have GNY, we have AMP, a couple others. So here we go to the real-time charts. A lot of pop-off today on price action after GDP miss announcement. We're going to get into why that is and what we can expect. But overall, guys, it's been a really crazy day. I wasn't looking to see the huge run-up that we had this morning after missing GDP. What are your thoughts, Nick?
Well, the most signaling thing other than sentiment spiking, sentiment was rising over into the evening and into the morning, which we called out in the TTC community. But I think the most impactful thing to me is the trading volumes. If you want to pull up your chart really quick again that you were just showing, if you look on the right side, look at trading volumes. And we know this is how we sustain rallies. So I think everybody should, if you're a TTC member, if you're not, obviously get signed up for TTC. But if you are, I would be monitoring that and forming some kind of benchmarks day over day and just kind of check out, obviously it's relative volume. So, I forget exactly if it's on what exactly rolling basis it's on, but double check that and then monitor that day over day, because if volumes begin to decrease, then there's a lack of interest, lack of liquidity, lack of, the quote unquote pumponomics going on. So that may be a bit of a signal, potentially in line or before sentiment starts to decrease, trading volumes may start to come off their highs. So I think that would be a good signal for people to look towards. And then if you are bullish, if you are buying into the rally, which we'll discuss, then you want to see those trading volumes stay the same or increase. So I think that's a really good thing to focus in on, because we haven't seen plus 50%. We haven't seen plus 100% in quite some time. Now, why we're rallying today is a fantastic question. We had a GDP come in this morning, and we discussed this yesterday. Consensus was 0.4% to 0.6%, came in at negative 0.9%. So, I mean, probably one of the largest GDP misses we've had in quite some time, and the market has been rallying. Now, why is the market rallying? Of course, yesterday we had, Fed interest rate decision, which we discussed, and we went over, kind of both ends of the spectrum in the trade the chain community. But really what it comes down to is, if you've been following along with our conversation, last week we got the Wall Street Journal indication of a 75 basis point increase with a federal funds target between 3 and 3.5% towards the end of 2022, with hopefully beginning to taper in the back half of 2023. Now, the Wall Street Journal said that, and then Jerome Powell said that. Now, if both of those are synced up, the market currently is certain that inflation is topping. The federal funds rate, it has a rollover in the future, and then we will, and the course will continue to stay as it is. Now, we both of us know, everybody, and I'm sure listening knows, that historically the Fed has been wrong, but the market plays off the information it has, and currently the powers that be are signaling that there is a light at the end of the tunnel. Now, the biggest question I think for everybody to discuss and continue to ponder is the light at the end of the tunnel just an oncoming train? And I think that's something that we really need to consider. But it does seem like, based on where we're at now, that the bad news is good news, or the not so bad news is good news. I would not fade that just yet, because we have no indication that the market's sentiment and feelings are changing anytime soon in relation to the data coming in. Now, of course, we have Amazon and Apple reporting at the end of the day today. So these are the biggest ones. No one cares about Roku and Intel. We care about Amazon and Apple, and we already got the Walmart trade earlier. So I have a feeling that if Amazon is a slight miss, it's going to be very similar guidance to Walmart. And we already experienced that shock. So I have a feeling that Amazon may not be as impactful, because we already understand what's happening on the supply side and how that's going to affect things. And plus, Amazon has AWS, which is an absolute moneymaker for them. And they're very insulated from things related to the supply side. Apple is a different story. Apple is going to be very interesting, because Microsoft had a slight miss but had positive guidance. If Apple's thinking the same thing heading into Q4, and they think they're going to rip iPads and MacBooks and things like that, then even if they had a poor Q2, I don't think the market takes that as poorly as one might expect, given what recently happened. So moral of the story is, I'm still a macro bear, but we have to understand that the bulls are out to play, and the narrative that we have appears to be a light at the end of the tunnel. So that's really how the market is digesting and looking forward for this. And of course, we just got ETH merge info today too, which has been a huge catalyst, and ETH's been a huge outperformer. And we're expecting the merge to go into its next phase, potentially actually merge next week, late next week, into potentially the following. So we have a litany of kind of bull cases ahead of us within an overarching macro storm. And here's the CEO of Up Only himself, who's
Up Only.
I'm sure has a thought or two from the experience side.
I just want to say real quick, I'm a huge ETH bull going into this merge. I really am. I think all the testing has proved to be flawless, and it's all the mainnets going through and everything like that. I'm definitely playing the Ethereum trade going into September. I missed those $4,500 price tags on ETH, so that's just me.
No, it's good. I loaded up a lot of bags around 950 or 980 or whatever we hit, just exactly at the peak of bottom sort of thing. So hopefully we're 2,500 and above going into the merge.
What does your shirt say? Keep calm and buy ETH?
Basically. I mean, it's like a no lose trade. I think it's only going to get better as time progresses.
Quick question for you, Don, is in relation to the ETH trade. I mean, you and Alex are very, you've been in the industry for quite some time, and I know you've dealt with both the operational and technical aspects of the chain and things like that. I'm not asking you to be an expert, but from what you've seen, what you've experienced, does based on what we're seeing now with the goal of the ETH merge, happening next week or potentially into the following, does that seem likely to you? Should we be able to trust that estimate, or should we go at it with some skepticism still?
I mean, skepticism is always good, right? Like given how the foundation progresses, how ETH is not just one company, right? It's not just like Solana pushing out Solana. It's like a bunch of different devs, different dev shops working together, sort of thing. So, and Vitalik being one of the heads, not the only person that's pushing it. So I think skepticism is always good. But I do think at this point, they've delayed it so many times that they really don't have a choice but to go ahead. They might push it by like a month or two,
This is their last chance. This is their last chance. List, there's going to be a couple of listeners who, who are TTC members or who listen to us, who I know are whether they're Cardano fans or whatnot. But I will tell you, this is the last chance for Ethereum really to secure market share on all the other protocols that have lagged behind, like Cardano.
Yeah. Cardano. Can't even say it with a straight face anymore. Alex is right. This is the last chance. Like I think otherwise they're gonna lose a lot of confidence and people are still good.
I tend to agree. And the big trade alongside ETH that we were discussing earlier has been Ethereum Classic. And we've mentioned that, a couple of weeks ago as well, because of the idea that miners are going to have to switch to something that's going to actually, put their miners to use or in their mining rigs to use, because they don't have because in a POS world, they don't really need, that infrastructure anymore. So ETC has been pumping alongside. I mean, egregiously pumping, much more than I think any of us really expected. But it's interesting now that, that when one core narrative begins, i.e. the merge, we're now seeing kind of the offshoots of these auxiliary narratives beginning, whether or not they're, BS or not, but Bitcoin Cash pumping, just because it's a fork coin. Bitcoin's not moving networks, so the miners aren't going anywhere, but Bitcoin Cash is now picking up.
I have a question. Does this mean Roger can pay back that exchange, or what's
Good question. I don't know if that's been settled yet, actually. It was still, CoinFlex has enabled withdrawals, so we'll see. Something must have happened.
They did enable withdrawals.
Yeah.
Interesting.
Ethereum Classic is interesting because I think it always kind of, historically, it's the one that pumps ahead of like a mini bull market or mini market move sort of thing. So that could be that. And yes, there is the narrative around the whole mining thing. But when the merge happens, it's not an immediate shut off into proof of stake, right? It's like a gradual kind of progression. So I think it will still be like a few months till it kind of turns proof of work completely off and moves into proof of stake. So.
Yeah, sentiment's been sky high. It's, I don't know if anyone's tracking the TTC. I mean, I came into TTC. I'm like, hey, we're pushing bullish on Ethereum. And I came back later. It was I was like, holy moly. So it's quite crazy how quickly the market is gaining momentum, especially at these highs. And if you're in the trade the chain community, we did, literally pre-market open, we said if S&P continues to open higher, expect 24K Bitcoin, expect $1,700 ETH. And of course, what do you know? So, and I think this was directly in relation to our sentiment analysis, is we saw things were picking up slightly yesterday, after a downturn. Things picked up heavy this morning. And look at the price action. It's one of the few very bullish coins on the street right now. Ethereum is, and then, Ethereum Classic is obviously, I don't want to fade this until sentiment starts waning at all. And I have a feeling that sentiment is still going to continue to be high into the merge because, just from a basic Twitter standpoint, everybody's going to be saying the same thing. So obviously, when that comes to a head is when you need to start worry, or is when you need to worry. But, fortunately, we've got the buy the rumor, sell the news dates in front of us. So,
I knew Ethereum ETC was going to be the trade today, Nick.
Alex, you maybe pull up the tweets. It's in our WhatsApp chat. I didn't pull it up myself.
All right.
If you click on that, just to give everybody an idea about what we're talking about, since they might not have seen the tweet. If you're in the Trade the Chain community, by the way, if you're in chat, it's in the Crypto Millionaire chat. But might be smart to pull it up for at least this conversation. So
here we go. I got it. Boom. This is let's take a look at this.
There you go. Maybe scroll down just a little bit to get that kind of email. Yeah, there you go. So the Bellatrix upgrade scheduled for hopefully August 4th. You know, this is based on, you know, I think blocks. So obviously it's an estimate. It can, you know, it's probably not going to happen right at 12/24, but August 4th is going to be a big date because I think people, if that goes well, then it's like, hey, now Gorley is it. So I have a feeling that we may see some volatility in between the 4th and the 6th, that maybe when you start to see it around top form with some spikes up. And then as we dip into the merge itself, that the Gorley as it's named, I would expect to start seeing us come off price action, especially if the predictions are for it to go well. You'll start to hear, I mean, you'll definitely hear whispers and you'll see price action come to fruition. I know there's a lot of conversation around should we long this? And I think right now, I mean, obviously we'll have a lot more conversations about this leading into the merge, but I'm always weary to long into news. Like there hasn't been a single major news event similar to this that has led to extremely high price action from at least my historical reference. But very curious to hear the committee's thoughts.
I want to know how they picked these names. Who picked Gorley? Who picked Bellatrix?
Not the person who picks the hurricane.
What is Gorley? Are these like stars? Like, I don't know. What is a Gorley?
I don't know. I tried to Google it. It's just coming up testnet names instead.
What's interesting? Okay, first I want to get your opinion, Nick. Are we buyers of Ethereum at 1725 or within this price range? What is the play?
All in. No, I mean, I'll be completely honest with you. I've been only scalping. Of course, having to deal with a move this weekend has made it difficult to trade with maximum proficiency, just because if anyone's dealt with moving apartments or houses, it's not an easy thing to distract your mind from. But I think if you're trading the merge, then I think that ETH is a solid buy, around between 1650 and 1700. I don't think you're going to be able to maximize gains, but if you look at it from a daily perspective, and I don't know if you have my chart up or not, but we've been talking about this for a few days, and it's been slowly creeping. So we had very similar price action in January, February, all the way into March and April. It's not exactly identical, but it's very similar in terms of market structure. And we are seeing a lot of volume beginning to come in. I mean, obviously, dripping a little bit on the day-to-day, but a hell of a lot more than it was, in this range. So the fact that there's a lot of interest, the fact that, we're sitting in between this little gap right here, it would make sense for us to maybe consolidate under the 100-day moving average and then move higher. But I think over time, especially with the merge being, 6 days away. So 6 days, that's, August 4th is right here. And I think all of us can see a scenario where ETH is touching between 2000 and 2400 in a 6-day time span. I think especially with this strength and this movement, typically we do see 3 green soldiers for this type of movement as well. So it would not shock me if we woke up tomorrow with ETH, in the $1,800 area and flipping this into support. Typically we would, respect resistance and expect that to come down. And I still think that's worthwhile. And then why I'm saying 1650 to 1700. But, I never recommend anybody buy at local highs, but clearly if I would have recommended that to anyone yesterday, they would have laughed at me this morning. So I think the best decision is to wait for a pullback and wait for a flip of resistance back into support. I think that's just always the wise technical decision. And then also be aware that we could see potentially 1600 or something right here as we consolidate back into this range and continue to move higher. So in that perspective, if you're looking at it from a daily or even 3-day perspective, I think it's pretty hard to be bearish based on this formation. And, I think maybe the one thing to look out for is my favorite little RSI trend right here. We did actually break this I think we broke this on the hourly yesterday. Yeah, so we broke this downtrend yesterday, which was pretty massive and clearly moving higher. And then we broke this downtrend as well. Here's the trend. Sorry for this other ugly line, but just look how elongated this was. And I even posted this into one of the chats, and I was like, in hindsight, it was so obvious. Like, this was the RSI cap for this entire, 7 day trend. We broke above that. We broke above that yesterday, and we've moved 20% since. So, if you're looking at that same methodology, if we can break above higher on the 3 day, I don't see why another move up to $2,000 isn't completely in play, potentially higher, depending on what happens with the merge narrative. So.
Yeah, I mean, I've been DCAing into Ethereum ever since the mid to high 900s. I think it's the play. The merge trade's really going to be profitable for those who are smart with it. And we're talking about medium term too. We're not talking about, you don't have to be Jedi Knight Nick and pull off scalps. Literally, it's a buy and hold at this point. So I like it. And the one thing that's never really going to happen in the near future is decoupling between BTC and ETH. So Ethereum is really going to be the one that's going to carry the rest of the crypto markets up, including Bitcoin, because you're not going to see a deviation between those Bitcoin and Ethereum.
We're seeing DeFi pick up a lot too, and I think that's it's the auxiliary narrative. This is crypto 101 for anybody who's been following along long enough. Once that narrative is cemented and that momentum is on, where else are we rotating capital to? I just made 20% on ETH. Where are we going? And that's kind of the thought of a lot of traders right now, and a lot of high net worth investors is, or if you're extremely intelligent, extremely sophisticated investor, you take a loan out on your ETH while your ETH rises, then you have a bunch of quote unquote free money to go and play around with. So, and I think that's another reason that why we weren't seeing stablecoin issuance increase, Alec, or we were seeing total market cap increase, is because I have a feeling that people were taking maybe a lot of loans out, kind of synthetic into the market. And so we know that when people get over leveraged, this momentum comes from leverage. When people get over leveraged, there's going to be a pivot point in the trade that's likely going to be 2K to 2.4 ETH, potentially 28 to 30K Bitcoin. Once that hits, once people start hitting their profit goals and they have to then go back and pay off their loans and things like that, that's when things start to unravel. So everyone should be very cognizant about what's, how these trades typically take form. They can go higher than we typically believe, but the fact that DeFi is now gunning along ETC, along BCH, we're seeing 20, 30, 40% boosts. Clearly, intelligent investors are out to play, and they are typically much more intelligent than us. So at least being aware of their methodologies and these target points can give you a better perspective on conviction to close your trade, take your money, and wait for another day.
And I would add to that, Nick, like you just said, crypto 101 this week has really been markets 101 for people that are new to trading or investing, or even, experienced people like ourselves. What you think may occur may not occur, right? Markets are not rational. They're irrational. You look at today's, earnings that came out. You had Meta, a slowdown in advertising sales. You had Qualcomm, a slowdown in handsets. Black & Decker had crappy earnings. GDP, there was a slowdown in non-durables, which means refrigerators and things of that nature, appliances, right? So all that and a negative GDP, of course, markets are going to go lower. What did they do? The path of least resistance right now is higher, right? So really it's a classic lesson of listen to the markets. Don't try to tell the markets what to do. The market tells you what to do, right? And follow that. With that said, what's next, right? The Elliott wave, I think we're in the third wave in terms of equities. We don't go from like 3 to 5 and that's over. So I think there's still number 4 in there, but it's fascinating what occurred this week because it's literally the opposite of what one would have thought would have happened. So.
Danish, I wanna hop over to you, man. So for a lot of you guys know who Danish is. He runs around a lot with us here, but if you don't, he is the CEO of FMFW.io exchange, formerly the Bitcoin.com exchange. But I want to get your perspective on how exchange movement is looking, how the flows are going, and what you guys are seeing with the retail trend.
So, yeah, good question, actually. We're seeing a lot of our action switched from spot trading to margin and futures. Spot volume kind of died down. It wasn't. It was. I mean, it's been low for the last couple of weeks anyway. But I think as of last week, our margin volume picked up a lot. And you know what it is? I think retail volume at a whole is kind of low for the past like 2 months. We see a lot more institutional flow coming in, and I think that's where the market currently sits. All the institutions that we work with, all the larger market makers, their trading shops, jumps, etc. They're the ones basically trading. Retail's kind of more buying and holding and using more of our staking products than anything else. So it's an institutional game right now rather than a retail game. But maybe this move, maybe this upswing now will bring back some retail confidence, because as we know, like over the last 2 months, everything was shot, right? People were depressed. People didn't want to hold. Everybody's like dumping the bottom sort of thing. But given the markets are behaving in a way that we didn't expect, I think we're going to see retail volume come back in.
All right.
Yeah.
Have you seen a decline in flow, let's say at the beginning of July, and increase towards the end now, or has it been consistent, or has it gone?
Yeah, heading into July was kind of bad. It was kind of like, just the end of June, beginning of July, everything was at the bottom. But over the last 2 weeks specifically, we've seen it come back on, sort of thing. A lot more activity specific. I mean, obviously this week, but a lot more activity last week as well. Like this week, just opening the weekend, because it was Fed week. We saw our volume like triple compared to last week, sort of thing.
And what about offerings? What about IEOs, IDOs? Have you seen a slow up with the market, much like the TradFi markets would see it slow up with IPO issuances?
Yeah, I mean, like over the last 2 months, I think, or 3 months, we saw projects just pause all their listings. So nobody did like a new listing after the markets crashed. I think a lot of treasury got hurt. We actually had I had a few calls from for a few of my portfolio companies whose treasuries kind of dwindled away due to Anchor, 3AC, or those kind of guys. So a lot of projects have paused listings. They're just concentrating on doing low cost DEX listings, which is fine. We've got like a DeFi offering as well, but IEOs are because retail confidence is not back, and a couple of them approached me for IEOs, but they also pushed it back towards Q4 because they're like, listen, we don't see retail volume coming in, and IEO and IDOs are like a heavy, it's a retail product. So they've pushed it out. A lot of their listings have paused as well. So I think the market needs to pick back up where it was maybe 3 months ago for that to come back on.
Okay. All right, cool. Now I want to pose a question. I'm going to, to Doug first, and that has to do with the economy and what we're going through. We're hearing the White House call that we're not in a recession over and over again at press conferences that they're giving, which at this point, it's hard to deny. I mean, the ultimate simple definition of a recession is 2 consecutive quarters of negative GDP output. And that equates to 6 months right now of that happening. Doug, what is this going to look like for the everyday person from now until the end of the year? What's your perception of how that landscape, kind of molds itself together?
Well, like Nick said, we have Apple after the close today. I mean, they're in the $1,000 handset, area, basically. Like maybe you bought one 6 months ago and maybe you refresh your phone every year. Like, are you really going to do that in the next 6 months? Are you really going to get the fancy new phone? Probably unlikely, right? So there's a lot of interesting chatter here in the States about the housing market. Everybody knew that it was a tight supply, just really hardly any houses for sale pretty much anywhere. And now they're talking about almost where you have supply building up from new builders, and now inventory is starting to pile up from existing sales. So that actually may be almost like another 2008 watershed event where you get this massive amount of supply and demand is crushed right now for the most part. And so now there are a couple of people, Mark Zandi, S&P, super, knowledgeable analyst. He's calling for almost maybe a 2008, housing, breakdown again. So no one really knows where the other side of this is, right? I mean, Powell says there's going to be pain. Some people said it's going to be mild. What's mild to me may be not mild to you, right? If I have to work 2 jobs, that's not necessarily mild. So, but the White House clearly is going to massage this the way that they want to. because as we talked about yesterday, we have midterm elections in 4 months or whatever.
Months. Yeah.
Yeah.
I honestly didn't even expect as negative of a GDP print just based on the White House's language. Maybe I should have, but I didn't expect it to be that bad.
I don't think
like,
I don't think one person came out and said I expected that much of a gap between guidance and the print. Yeah.
I had a question. Where do we think housing's going to go? Right. I'm surprised it hasn't taken a hit yet, because we saw over the last 2 years, people were just like, housing was the boom. Now rates are super high. New mortgage rates, people are like getting crushed right now. Whoever didn't have a fixed mortgage, they're pretty crushed.
Danish, on your Caribbean island, I'm sure housing hasn't been felt yet, okay? But, but we're already starting to see. I mean, we just, we spoke the other day about how Austin is 10x'd in rent prices over the last, certain duration, and we're seeing a slowdown. We're seeing an inventory glut begin in the beginning forms right now. I think I saw somebody on Twitter, or no, I saw someone to Trade the Chain in our Discord. Someone has their house for sale. When they went to list it like a couple of months ago, there was 15 homes for sale in their area. Now there's 60. So I think we're at the beginning stages of seeing that. And to what Doug's been saying, we have home builders slowing on numbers. Last quarter was a record quarter for new home sales renegs. In other words, people walking out on contracts. So it's
and also too, Alex, the BlackRocks, Blackstones, they were big buyers, right? They were buying 1,700 piece parcels at one shot, but they use that because of cheap money, right? So it's not like they're sitting on billions of dollars. They're financing that. So cheap money period's over, right? So.
My triggers in relation to my housing theory is so rents are sky high. I mean, why would you, if you're buying a shit ton of properties, either you're PE or you're trying to be some sort of slumlord or whatever, you buy all the properties, you buy it on debt, and then you raise rents to maximize profits and try to shield yourself from any downturn. So rents are high. People will stop paying rents soon. They're already going back on credit card debt, on cell phone bills, cable bills, things like that. Rent is next. Rent, that will be felt likely closer to the holidays, as the entire crunch of, do I pay for heat? Do I pay for cell phone? Do I pay for rent? All of that should continue to get worse. So when rents start to come to the point where they're coming down because people are being evicted and then there's no one else buying new or renting new properties, then I think that's going to be the big signal of like, okay, now we need to start looking for the bottom. And I think the bottom in relation to what we saw previously will be private equity coming back in to scoop up houses off all the idiots who went and bought 5 properties and loaned 30 million, or went leveraged $30 million, like all those TikTok idiots that we see. So I have a feeling that the big signal is when rents come down because nobody can pay rent and nobody's moving into new places because nobody can afford to move. That'll be the trigger. And then I will look for private equity scooping up, the buys and things, basically the data will be like, oh, houses are selling, 20%, 30% under clip or 10%, whatever it is. But if they're selling and they reach some sort of stagnation or some sort of consolidation at a bottom, then we'll know who's buying, why they're buying, and who they're getting bought from. And then we'll be able to look towards the next set of the cycle where, rents will go crazy in the next bull run. So, I think New York rents are higher than 2019.
I have a question for Danish. What do you think that, from your perspective as a business owner, what do you see the yield market looking like in the crypto space going forward? Just because we discussed yesterday, money market CDs, those are now moving up, obviously, with the Fed. So then now is like, if I want to lend BTC and I'm getting 4%, do I want to do that if I maybe can get a 1-year CD? Like, how is your market? How do things look now from your perspective, given the fallout of the last couple of months, and then going forward with the rise in rates and stuff?
I think the yield markets have lagged behind, sort of thing. I think people are still kind of lending out. We have a lot of deposits that people are just like, I'm not trading this. I'm just going to keep it there. I think that will change over the next few months. But right now, the yield market still, and as all the shitcoins and everything pumps, some of your yields kind of go up even more. It's like, because the shitcoin you're yielding is going up in price. But I think the yield market has lagged a little bit, but it'll slow down as we progress over the course of the next 6 months or so.
And is BTC, like if I lend it out, have those prices changed a lot in the last couple of months, or they're still, I get what, 4% on BTC or something?
Yeah, no, they're still pretty stagnant. Although I get emails from BlockFi being like, "Hey, we've increased our rates," and I'm like, you guys are about to go bankrupt. Why are you asking me for my BTC right now? No, I think a couple of lenders and borrowers are still doing the same rates. Abra is a really good example. Bill's a good friend of mine. They were very secure during the whole fallout. They didn't deal with 3AC. So I think they're still offering 3.5% sort of thing. They're the better ones. Everybody else is between 2.5%, 3%, but it hasn't changed as yet.
It's still beating the bank return. So
I know, right?
I mean, they could have offered that from the beginning if we're going to talk about all the messes that everybody's cleaning up now, and we still would have all stuck around. Guys, for anybody who showed up late, it's been a great show. Obviously, we brought our friend Danish Chaudhry, CEO of FMFW Exchange, formerly Bitcoin.com Exchange. We spoke about the Ethereum merge and all the positivity that's coming out of that, as well as our quote-unquote fake recession we're going through right now. But there's been a lot of price action in the market. Is this going to carry forward to the Ethereum merge? Is it going to be carrying Bitcoin along in the process? Nick explained about the local top that we have now and the great possibility of retraction before we get to the end of that trade. So, I'm going to reiterate what I said in the beginning. What I'm doing right now is I'm doing what I do most of the time markets, which is I'm scalp trading across these ups and downs through the volatility, but I'm DCAing. I mean, if we haven't seen the greatest opportunity in DCAing, in my opinion, since Danish and I were sitting shoulder to shoulder in a London trading floor with nobody else in the room during the last crypto winter. This has been the best time to DCA back into the market that I've seen in a couple of years. So, Danish, thanks for joining us today, man. Appreciate it.
Thanks for having me. I'm glad I could wear a hat with the rest of the hat crew.
Yeah, no. That's
CEO of Up Only. Danish popping on TTC could be the bottom, guys. This is huge.
That is actually a good point. Danish Up Only Chaudhry making an appearance on TTC could signal the bottom.
only good for the markets, right?
Guys, thank you again, folks. Thanks for watching. Don't forget, if you aren't subscribed over Trade the Chain channel and watch Nick's daily clip midday Eastern time, please go and do so. It's the best 15 minutes of news you will get for the day on the markets. Way better than this show ever will be. But thank you very much. We will see you again tomorrow, and we will see you without Nick. Nick has some traveling to do, but he will get in on that daily show before he cuts out for the weekend. Thanks, folks.
One quick just to note. I think we have one more important metric coming out tomorrow that may impact price action going into the weekend, which I'll cover in the morning best I can. But we have PCE coming out at 8:30 a.m. Eastern Standard Time. We also have personal income and personal spending. So we'll know about where consumers are spending their money, how much they're spending in comparison to their debt. And we will also know the personal metric for inflation, which is personal consumer expenditures. So those are coming pre-market open tomorrow, which will likely impact futures, which will then impact probably crypto. So
I don't want to give a spoiler to that, but I'll tell you where personal income and personal spending are right now. They're down. Okay.
Consumer debt is also at an all-time, which is typically a signal that something bad is coming. So
isn't it funny? Like about 12 months ago, these metrics didn't matter. Nothing. Everything was still up only, and they're like, "Oh, what's the personal spending index?" Nobody cares. But now everybody's watching it like a hawk.
Literally, inflation was double or like 4, 5, 6%, and we were still buying fucking Bitcoin.
I know. Crazy.
All right, we gotta go, guys. Thank you very much. We'll talk to you tomorrow.